All right, let's dive right into this explainer. We've got an absolutely jam-packed 3 days of market intelligence to unpack from May 14th to the 16th, 2026. And honestly, the contrast we're seeing right now is just wild. We are looking at explosive, off-the-charts domestic corporate wins crashing head-on into some seriously turbulent global headwinds. But before we even get to the agenda, I need you to just look at this single number, 4,945%. I mean, no way, right? That is Mukan's year-over-year Q4 net profit surge. It's jaw-dropping outliers exactly like this that completely defined the extreme micro-triumphs over these 3 days. So, to make sense of the sheer volume of data we have, here's how we're going to break it down. We'll start with those staggering profit surges in Q4 earnings standouts, then look at some massive capacity expansions. After that, we'll pivot to the strategic India-UAE partnership, and finally, wrap things up with a reality check on macro headwinds and volatility.
Okay, kicking things off with Section 1, those staggering profit surges and the absolute outliers of the quarter.
Like we just talked about, Makan's leaping from 109 million to 5.5 billion rupees is insane. But get this, they weren't alone in this anomaly. Sangamai Old Jewelry jumped 346% to 1.4 billion. Selects Energy shot up 306% to 580 million. And Valiant Organics surged 280%. These aren't just your standard run-of-the-mill incremental gains. We are talking about fundamental phase shifts in profitability for these specific firms. Moving right along to Section 2, let's look past the extreme anomalies and check out the Q4 earnings standouts across the broader sectors.
Looking at the heavyweights here, Gland Pharma absolutely knocked it out of the park with a 95% increase, pushing their net profit to 3.7 billion rupees. Godfrey Phillips was right on their heels, up 86% to reach 5.2 billion. And Finotex Chemical? They climbed a very solid 58%. So, what's the big takeaway for us here? Well, it tells us that broad-based consumer and pharma demand is translating directly and powerfully into bottom-line expansion for established players.
But hey, it's not just about backward-looking profit, right? We've got to look at where things are heading. And the forward guidance is incredibly aggressive. JSW Steel is mapping out a massive 22,000 to 24,000 crore capital expenditure plan to hit nearly 30 million metric tons of crude steel production by FY27. At the exact same time, real estate giant DLF is targeting an enormous 20,000 crores in residential sales for FY27. It's just a massive projection of corporate confidence in India's domestic growth story. Now, what are these companies actually doing with all that capital? Let's jump right into Section 3. Massive capacity expansions and how they're funding the future. Right now, we are watching two completely distinct pillars of India's green energy pivot take shape. On one side, you have Fujiyama Power aggressively scaling up solar manufacturing with a 350 crore investment for a 1.2 gigawatt TOPCon solar cell expansion. And right next to that, Ola Electric just greenlit a staggering 2,000 crore capital injection into its EV and cell tech subsidiaries. This is serious momentum, and it's bleeding right over into other key sectors too. Way beyond just green energy, domestic capital is being deployed at a rate we haven't seen before to build out physical and logistical capacity. Listen to this. Solar Industries just hiked their FY27 revenue guidance by an eye-watering 42% to 14,000 crores, and they're backing that up with a 32% capex hike. Pitti Engineering, they're dropping $2.9 billion into a brand new casting facility. Meanwhile, CMS Infosystems is expanding its ATM fleet by 10,000 units, and Wellspin Corp just secured a 700 crore global order for U.S. pipes. The capacity build-out is quite literally everywhere you look. Okay, let's step outside the pure corporate data for a minute. Welcome to Section 4, where we're digging into a major geopolitical catalyst, the India-UAE partnership. This partnership is a huge deal. It brings a multi-pronged $5 billion UAE investment straight into Indian infrastructure. But listen, it goes so much deeper than just cash. These two nations signed a strategic defense cooperation pact. They hammered out agreements on oil reserves and gas supply to lock down energy security, and they even signed a memo to set up a brand new, highly strategic ship repair cluster in Vadinar. It is honestly fascinating to watch two very different geopolitical approaches playing out at the exact same time. On the one hand, you have the US and China cautiously planning to create trade and investment councils just to sort of stabilize their communications. But over here, Prime Minister Modi explicitly stated India stands shoulder to shoulder with the UAE, actively solidifying long-term strategic, defense, and economic commitments. The contrast in approach is night and day. But how do these domestic micro wins actually stack up against the broader global picture? That brings us to Section 5, time for the macro reality check. And here is where that reality check really hits hard. $28.38 billion. That is India's widening merchandise trade deficit just for the month of April. It was driven by a massive influx of almost $72 billion in imports. So it's a pretty stark reminder that despite roaring domestic corporate strength, the broader economic balance of trade is under severe pressure. On top of that, global volatility is seriously intensifying. During this 3-day window, we saw steep sell-offs in the U.S. markets. The Dow Jones dropped over 500 points, and the Nasdaq shed about 400 points thanks to deep tech sector weakness. And if that wasn't enough, oil prices spiked over $3 a barrel, driven entirely by renewed geopolitical tensions and risks in the Middle East. Now, the whiplash from these macro headwinds isn't isolated at all. It's rippling right through the entire system. We saw a sharp commodity correction, with silver dropping almost 7%, falling below $80 an ounce. Over in the U.S., interest rate futures completely shifted, and they're now showing a greater than 50% probability of a Fed rate hike by January. And locally, this global turbulence forced the NSE to issue warnings for abnormal volatility in specific domestic stocks, explicitly flagging Mutooth Finance and United Spirits. So that brings us to the core tension of this entire explainer: explosive domestic growth on one side and turbulent global crosswinds on the other. So how will you navigate a market caught between 4,000% micro triumphs and widening macro threats? I'm going to leave you with that question to chew on as you digest all of this and plan your next moves in this highly polarized, high-stakes environment. Thanks for joining me.